Good morning, this is Data Explorers and I'm Jessica Johnson. Paul Marshall from the hedge fund Marshall Wace spoke out in the Financial Times in London this morning against the short selling ban in the UK, saying it was a mistake. He said that short selling is the main risk management tool for hedge funds in their quest to preserve clients' capital. Banning them from shorting is akin to asking Formula One drivers to operate without brakes. Without proper protection, they will simply withdraw from the race. Thus, funds with strategies particularly dependent on short selling had no choice but to withdraw, leaving markets that they rely on for their participation, such as the convertibles market, paralysed. The ban was an example of extreme regulatory hazard, he said, undermining the foundations of an industry and of a number of markets that are critical to capital provision. Stock specific now, and we're going to talk about French and Belgium stocks today, starting with France Telecom, and then moving on with Groupe Danone, Peugeot and in Belgium Fortis, who all have earnings announcements today. France Telecom has seen a low amount of short interest over the last 6 months. Despite the dividend trades that you can see on this graph, the spikes in the borrow actually dividend trades and not short interest. The last time that short investors increased their positions in this stock specifically was between February and April of 2008, when the percentage of shares outstanding on loan rose from 5 to 10%. And over the last 2 to 3 months, this figure has remained constant at about 5%, ebbing and flowing around that mark. The company's share price has fallen from 24 to 18 euros over the last 11 months, despite a recent uptick in the price from 16 euros a fortnight ago. Utilisation, or the percentage of the available supply out on loan to short investors, has increased slightly in the past 2 months from 18 to 20%. Groupe Danone now, who have a similar amount of shares on loan at 6% and down from 9% in November. As you can see, there was a particular increase in the borrow between October and November of last year. The company's share price has also fallen from 55 to 40 euros between April and now, with utilisation now standing at 28%. Peugeot, who announced 11,000 job cuts earlier on Wednesday, have 6.6% of their shares outstanding on loan, up from 4.5% in late December, but down from 8.5% earlier that month. The share price has dropped consistently from 35 to 15 euros over the last 6 months. Utilisation is at 35%, up from 25% 6 weeks ago. Finally, Fortis, who have the lowest short interest of all the stocks mentioned today, with 2.5% of their shares outstanding on loan, down from 3% in October. But as you can see from this graph here, up sharply from 1% in the last 2 months, of September. Utilisation has come down from 40% in December to 30% now, but again in the same time frame, up very sharply from 5 to 35% late on in September as the shares outstanding on loan rose as well. In early February, there was a large volume of shares traded earlier this month, 70 million shares compared to the 6-month average of 30 million. For more information, please go to our website, dataexplorers.com. Many thanks, have a great day.